buddy?
Good, man. How about you?
I'm doing well, thanks. I'm recording this right now.
Okay, awesome.
We're not going to be live on Facebook today, but I can record this and post it on my site, so on my YouTube.
Yeah, absolutely.
So, Mike, you're at the office. That's good.
Yes, sir. Here every day.
Excellent. Yeah, I passed by the office yesterday, and I was like, man, I want to go in so badly, but get that.
There's rarely anybody here. But it's been good. So.
Is it? Good.
Yeah.
All right. Well, thanks for coming on with me, Mike. And I just wanted to have you on today. There's been a lot going on in the real estate market, especially concerning the mortgage and lending situation.
Right.
And I wanted to get you on and
lots of changes, both guidelines, the way that things are done. It's just a completely different. Everything's completely different than it's ever been before, as much of the world right now. So it's it's kind of to be expected. So
we got the job numbers yesterday, and we added another 5 million to the unemployment insurance claims, which the good news is less than what we had before last week before.
Right.
Before it was 6.2, and it was it's 5 million this week. But the bad news is that there are people out there who can't afford a mortgage. They're looking for alternative ways to kind of get by. And I wanted to see if you could kind of touch up on that, see if you can give us some insights.
Yeah. So, obviously through the CARES Act, they've put together a deal that if your loan is government backed, then you have the right to an automatic 180-day extension or forbearance on payments. The deal is there's a lot of misinformation of how that's going to work. And there's several different ways that it can work. And each individual servicer might be different in how it's handled. And then you could technically extend it for 360 days because it's 180 days, and then you can ask for an extension for another 180. So you're basically talking about a year. The deal, though, is that if you can make your payments, you need to make them. Like, you don't need to use this as an opportunity to say, well, I can just not make my payments for a while. That will just add to the other areas of concern in the economy, because what happens is that the servicer of the loan still has to make those payments each month, whether you make the payment or not. As the consumer, the servicer has to make that payment to the investor each month. And when you add up the number of people that would then be going into forbearance, one of the servicers, Mr. Cooper, is the third largest servicer in the country. And they estimated that over a 3-month period, that based on what they were seeing, if in forbearance, they would lose $40 billion. And there's very few companies that can afford to lose $40 billion.
Yeah.
And so that will hurt things long term if you have people that are not making their payments when they really could make them. The other thing is that if you have people calling the servicers to ask about forbearance, but they really don't need it, then you're tying up the phone lines and keeping people that really do need it from being able to get through. So if you can make the payments, you should. The negative side to the forbearance could be that, let's say you forbear the 6 months of payments, 180 days. Well, under some of the programs, some of the servicers, then when that 6 months is up, you got to pay all 6 months worth of payments right then.
Right. Yeah. That's
where's that money going to come from?
Absolutely. I heard about that. I was going to ask you about that. Yeah. Everything is due kind of like a balloon payment after 6 months, right?
Correct. Yeah. So they will either, the other option is some of them will allow it to be tacked onto the end, and they'll just add 6 more months of payments to extend the term out that long. But that's not always the case. And so that's why it's important that people talk with their servicer who's handling their loan. And keep in mind that the 180 days is only for government-backed loans, meaning that it's an FHA, USDA, VA, or a loan owned by Fannie Mae or Freddie Mac. Now, that is a large percentage of the loans in America, but it's not everybody's.
Right.
So if your loan's not owned by one of them, and that doesn't mean that's who you make the payments to, but that's who owns the loan, the investor. If it's not one of them, you would then have to contact your actual servicer / bank that has your loan and discuss the options with them.
Because some of the loans are owned by the bank themselves, right? They're in-house loans.
Correct. Some loans portfolio them.
Portfolio loans, exactly. Yep. Excellent. So if you don't have to ask for forbearance, you shouldn't, because it ultimately in the end it could cause you some trouble.
Correct. Yeah, it's not going to be free money, so
right.
It's going to have to be paid at some point.
Okay, great. Thanks for shedding light on that. So what about the procedure in getting refinancing your loan right now, especially with people who are out of work? What there are new procedures in refinancing? Can you talk about that?
So there's new procedures all the way around for loans. Let's kind of talk through a couple of different things that are different from what people might have expected in the past. One of the biggest changes is in appraisals. It used to be that an appraiser had to come into the property, they had to do everything. Right now, that's not the case. It doesn't mean that it's always done where they don't go in. They have the option to. And sometimes it's beneficial that you would want them to come in. Because if you've got a lot of upgrades inside of your home that you're looking for that value to be counted for, the appraiser's got to come in and see those things to be able to count it.
Correct.
But if, the appraiser doesn't feel comfortable or the consumer doesn't feel comfortable having the appraiser come in, they can do an exterior only or a desktop appraisal. And those are accepted now, whether it's an FHA, VA, USDA, or a conventional loan, doesn't matter. So those things are all kind of in place that are different than we've ever had before. The other things that you have is we have to now get verification of employments much later in the ball game because of the number of people filing for, getting laid off or furloughed or whatever the case may be. So it used to be that we just had to get a verification of employment done in the last 10 days before closing. Now, almost all lenders are going to be doing those within the last 48 hours and oftentimes in the last 24 hours. So you're trying to do that in a shorter time frame, and you're then trying to do it with HR departments and things of people that are working from home that might not be as responsive as they used to be. So it's taking a little bit longer, and you have less time to get it done. So it's kind of pinching it in on both ends to squeeze it in at the back last minute. The other part that's really different is closings, both for refinances and purchases. On a refinance, you normally just had you and the attorney and the loan officer if they came. But on a purchase, you'd have the seller, the buyer, the loan officer,
right, 2
realtors, an attorney, everybody sitting at one table. And now we are at Silverton, we're doing a lot of the documents e-sign ahead of time. And then a smaller percentage of the package is being signed remotely via video, just like you and I are doing right now. And basically what happens is you get the buyer, who then basically what they do is they hold up a piece of paper and show it to the attorney, and the attorney says, okay, and then they sign it, and the attorney watches it, and they hold it back up and say, see, I signed it. And then the attorney basically video and has to record it and keep the copy of the video to show that everything was done. Then the documents are either hand delivered back and dropped off curbside, or they're mailed, FedEx back or whatever. And the closings are kind of handled that way. Nice days like today, you probably could drive around to see attorneys and see tables set up out in the parking lot and people signing out in the parking lot. That's kind of become more of a normal thing, and to keep things going. And attorneys are basically saying, once you pick up that pen and you sign, it's your pen, you take it with you, don't leave it. Exactly. So it's a lot of different things.
A couple of attorneys I know who I've worked with are doing curbside signings.
Right.
And one of them told me that the first time they did that, it was the weirdest thing in the world. And it was more weird for the two sides, the buyer.
Absolutely.
But
it's completely different, but everybody's adapted really quick.
Exactly. Yeah, it's sign of the times now, and good thing about us is that we adapt really quickly to change.
Absolutely.
As much as some of us don't want to adapt to change, we do.
Absolutely.
Change. Here I am talking to you on your video.
Absolutely.
So
the other things, real quick, just to let me kind of throw this in there, is that
sure.
People have probably seen a lot, both consumers and realtors have seen this, that a lot of mortgage companies have drastically changed guidelines during this process. A lot of companies have said that they won't do government loans if the score is not at least 660.
Right.
Where a month to 2 months ago, they were doing it 580. Well, that's a huge jump, and that's a big percentage of people that then don't qualify. And then some, even when they can do them, are charging 3 or 4 discount points for an interest rate just to get someone a rate at that point. You've also had a lot of companies on the other side of the spectrum that have said, we won't do jumbo loans, which are loans over $510,400. And the rates on those are a little higher now. Rates on standard loans and for us on government loans is much lower than what it had been. I mean, we're refinancing people that bought 12 to 18 months ago with rates now of about 3.25% for a 30-year fixed rate on a conventional loan. And on government loans, we've done purchases in the last week or so with 30-year rates below 3%.
Wow.
So when you can borrow money in the 2s or low 3s, it's crazy.
Or FHA and VA.
So on FHA and VA, correct. So it's just been really, it's a unique opportunity for people that are in the position to be able to take advantage of it, whether it's through a purchase or a refinance. We are busier than we've ever been, both my team and I, and as a company. And it's just it's a crazy time, but there is plenty of opportunities for people through refinancing to save money, which is important anytime, but especially in a time like right now. And the process is pretty quick and painless, 3 weeks or so to get everything done. So, we're still here and helping people every day.
You are, and you're awesome, Mike. I worked with you for a while, and you're really good.
I appreciate that.
So my last question is going to the market aspect of the whole thing. Do you see more refinance loans, or do you see just as many purchase loans?
So our purchase loans are basically about the same as where they were this time last year, maybe a tick below, but not much. I mean, yesterday alone, we sent 6 pre-approvals out for people that were brand new yesterday, just starting the process.
Wow.
But we'll close just as many refis this month as we will purchases. But the refis are way more than what we would typically do in a month. But the purchases are about the same. And it's this, good this month. It was last month, and it looks this way for May. So far, we're not really seeing any slowdown on the purchases. I think that a lot of people are seeing the opportunities with the rates and realizing that, now's the time to do it.
Well, now, with me being out on the field, I see, I still show a lot of houses, and I still get calls about listings. And I think people are out there trying to take advantage of low rates.
Right.
And so, we're technically in the spring selling season, although you wouldn't know it, but we are in spring selling season. The inventories are low. So people are out there, there are many buyers out there and taking advantage of the low rates and trying to get into a home
right
before the summer. So the minimum qualifying credit score right now, what would it be?
So we're at 600 with Silverton. We will go down to 600. I don't think we're going to raise that. We were at 580 and we went from 580 to 600. As I said, we've seen some competition go higher than that. But we're comfortable with where we're at in the market from that perspective, and feel like those people need to be served, and they deserve a home, just as much as anyone if they're, financially sound and able to do so, from a down payment perspective. And that would be on an FHA loan or a VA loan. So FHA would be a 3.5% down payment. And, it's a little tighter than it was before, but, still really good. And those are good loans. They've, it's been proven over the last few years that those loans perform very well, and don't see that changing necessarily.
Excellent. Well, Mike, thank you so much for your time.
Robert, I appreciate it. You are always awesome. Great to see your smiling face.
If people want to find you, how can they find you and take advantage of your services?
Absolutely. So they can reach me anytime through my cell at 678-410-6509. Or they can check out our website at MikeGarrettMortgageTeam.com. And then they can email us through there, contact us through there as well. There's also some good videos on our website that just kind of explain the loan process, talk about why we're a little different than some other places.
Mike, thank you so much. You're awesome. Your family's awesome. And I hope you stay safe. Thanks so much for your time, buddy.
Thanks, Robert. Tell the girls we said hello.
All right. Talk to you soon. Bye-bye.
All right, bye-bye.
Thank you for watching the Masoudpour Minute. If you like my videos, please go ahead and click on the subscribe button and the bell button, and you'll be notified next time a video drops. Also, if you'd like me to cover a specific real estate topic, please send me an email to topics@path2soul.com. Thank you so much. I really appreciate you. Talk to you soon. Bye-bye.